Unemployment is just 3.8%. Earnings growth up more than 20%. GDP could come in at more than 4%. And oh yeah, small cap and tech stocks domestically, all they do is keep making new highs. Things, in other words, are good. But are they too good? Do you sell at the top? Joining us now is Sven Henrich, founder and lead market strategist at Northmantrader.com. Sven, thanks for joining us.
Hi, Brian.
You know what listen, Warren Buffett over the weekend selling part of his stake in USG, the big boring wallboard drywall manufacturer in the United States. Buffett loves to buy low and he loves to sell high. When you see Warren selling, does it make you think maybe now's the time?
Well, look, when we looked at this recent rally that we've seen, about a month ago, we talked about S&P maybe filling the gaps in 2700, 2750. And the question for me was, do we now see an improvement in participation? Because what we've seen over the year is really a divergence in favor of just a few stocks making these gains. And you just mentioned all the backdrop of the good news. And guess what?
So much good news.
So much good news. And, you know, ironically, the larger market is not participating at all.
Why not? That's the mystery.
Well, maybe it is a mystery, maybe it's not a mystery. I mean, on the surface, we have this accumulation in a few stocks where all the high cap tech is
the
FANGs and all, even Boeing, right? The ones that control really a large portion of these ETF allocations. The NYSE, the larger New York Stock Exchange Composite Index with over 2,000 stocks in it, is actually down on the year, right? 42% of its components are below that 200-day moving average. And at the same time, we're seeing volatility completely collapsing again. So there's something going on under the surface. And the question that we're all facing here is that obviously GDP may be peaking here in 2018, as well as earnings growth. 2019 is going to be a different year. We may still have some of the positive effects, but then things are going to slow down.
Let's go back to the previous story. This is a very important one. I know it's early in the States. I want everybody to take another sip of coffee and listen up. Everybody's buying 10 or 15 stocks.
Yes.
And I'm being a little facetious, but you get my point.
Right.
But they're at the top of all the ETF allocations, to your point. There are two very different ways to look at this story. Number one is good news. They sell those stocks and buy all the other stocks, lifting the tide. Number two, they sell those stocks, take their money, and go buy something else unrelated to equities. That's bad news. Which one do you think will play out?
Well, for the very short term, we're fairly overbought on the market. So I expect a test here in the next few weeks in terms of the recent rally. And as long as, I'm looking at it purely technically, as long as we can hold about 2,700, I think markets are relatively fine. Should we drop below 2,650, then I think we may see the February lows get tested. The risk for everyone here is that so much of the market value is now concentrated in these few stocks. If they turn, and so far they have not shown any signs of turning.
They have not?
No, they keep on going, but at the same time they keep extending very much beyond technical norms. And so what happens is if you get a turn in these stocks, it obviously will have a disproportionate impact to the downside.
Can you quantify disproportionate impact? What happens if Amazon or Netflix or Google starts to get sold off en masse?
Well, look,
what happens?
I mean, look, at this point, some of these stocks now have, I think the top four FANGs actually control more market cap than Germany's entire GDP, right?
Yeah. And they're about 40% of the QQQ, NASDAQ 100 ETF. It's not diversified, is it?
It's not. So if you own QQQ as an ETF, you know, 10 stocks is 55%. I mean, it's that narrow. So much of the ascent that we've seen is completely attributable to these few. So.
Is that the single most? We've talked about ECB, we talk about oil, we talk about currency, we talk about bond yields. Is the fate of those couple stocks, to you, Sven, the most important thing for the macro markets right now?
I'll tell you what, this bifurcation that we're seeing in the market is not unusual in the sense we've seen this before. In 2015, for example, for months, the market was in a tight range, but the internals kept deteriorating. Then there was a trigger, and then boom, we had quick downside. Same thing happened in 2007. So we closely watch for these divergences. As long as they don't matter, they don't matter. But when they do matter, then the impact and the weight of all this is fairly significant.
Well, you do.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.